Hi, Tim Bigham back again this week for Delta Derivatives, option hedges and edges, powered by the best option scanning tools out there, rbtrader.com. And taking a look at the market that's making a move towards that upper part of the trading range. First day in four that were up on the day, looking using the SPY as kind of a surrogate for the market. 211 is now resistance to the upside. That was that old breakout level. 207 support. So we're challenging towards the upper end of the range here. The VIX heading a little bit south, certainly here today. 13 kind of the floor, 17 to the upside. We did see it briefly last week, pierce through, actually traded briefly with an 11 handle, but with the sell-off in the market, we see the VIX at the lower end of the range. So I think we'll kind of trudge around here, wait and see if we can break out meaningfully to the upside. We have oil up today, and the airline stocks actually up today, even in the face of higher oil. Yesterday we saw some big call volume across the board on the airline names, and had a couple names, airlines generally lower, but had United and American actually closing higher on the day after briefly making new recent lows. I like that kind of price action on the chart. I like the fact that there were aggressive buyers of the call options that expire this Friday. So I structured a couple call calendar trades on American Airlines to take advantage of that, and United, looking for the stocks to move higher here. On American, I am selling this week's 41 calls, buying next week's 41 calls, paying about 40 cents on that. Implied vol, even with the stock up yesterday, went from 38 to 43 on these front week calls. So looking to capture some of that implied volatility spike. Same thing with United. We saw a buyer and a fresh buyer, hardly any open interest on the 54 calls. So I am selling those, or over 5,000 that traded yesterday, buying next week's 54s. Again, a slightly bullish position and looking to capture that implied volatility spike. On United, the vol went from 35 all the way up to 41 yesterday. Again, even with the stock heading higher, normally you see a contraction in implied volatility with stocks heading higher. On another front, OCN, Aquin Financial, we've seen big buyers out in July on the 10 and especially $11 strike price calls. Saw almost 10,000 of the 11 calls trade yesterday. I'm using the fact that they have basically gone up 70% in price on these July 11 calls since last Thursday, with the stock unchanged. So I did a little analysis. Last Thursday, OCN is the ticker symbol, closed at 10.02. These July 11 calls were 25-cent bid offered at 40. Yesterday, the stock closed at 10.02. These July 11 calls were basically 50-cent bid offered at 60. So they were up 70%. So almost, as I said, 10,000 nearly contracts trade yesterday, drove that price up appreciably. So I'm doing a simple buy ride. I'm buying the underlying shares, selling these calls, and looking to capture that implied volatility spike. And on a $10 stock, certainly a 25-cent edge or so is a very nice edge indeed, leaning with that big call buying flow. So I am bullish along with them. If you're looking to be a little bit less aggressive, certainly selling those July 10 calls, which actually moved up about 20 cents in price with the stock unchanged, will give you a little more downside protection, not quite as much upside. So until next week, this is Tim Bigham, and especially in this market environment, keep those position sizes in place and those stops going, and of course, go Blackhawks. Take care.